Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Thursday, January 18th, and crypto market is experiencing a bit of a pullback. This isn't too out of the ordinary. We've kind of been, talking about this possibility over the past week or so. I've been telling the TTC community it's more likely than not that we sweep some weekly and yearly lows on Bitcoin before we move higher. Of course, wasn't trading for that, just waiting patiently for something to happen. Obviously, we're now kind of moving a little bit lower, but nothing is too concerning right now. So total crypto market cap 1.64 trillion, slightly down. BTC slightly down. ETH slightly down, sentiments neutral to pushing into a little bit of bearish for Bitcoin, mostly neutral for average daily sentiment. Tweet volume down, trading volume also a little down as well. We use stablecoin exchange flows, a little bit more out than in. So we are seeing some signs of what we would expect along with a pullback. Nothing too bad, but definitely want to see some of these price targets that we're going to talk about hit and recover quickly. So Bitcoin sentiment still kind of moving lower, not too negative, but obviously not in the right direction, and very much same for ETH. Just kind of trickling into that neutral area, not really making too big of a decision, but certainly not looking too positive. So looking at DXY, we did, we sold off a little bit yesterday and moved right back to where we spoke yesterday. And same situation, break above 103.6, move up to 104.2 or higher, get rejected, move down to 103.2 or hopefully lower. So does look like it's trying to move higher, but still underneath that 12-hour estimated 200 moving average. So definitely want to see that pipe back lower, but probably won't see too big of a sign until early next week if I had to guess. Equities failed at the weekly VWAP. Move this down to 1 hour, get a little bit closer of a view. So failed at the weekly VWAP, also 1 hour estimated 200 moving average. Now we're sitting at mid-range, holding at this low from back in January 11th. Definitely want to continue to see that 47.30 low hold. Obviously we had that deviation earlier in the week. And so we're just kind of sitting mid-range. Not much has changed since we spoke yesterday. We did, have a nice little recovery higher, but obviously not looking good with rejection right there. So, definitely we got a bit of a lower low. We want to continue to see this move higher. Obviously, if we fail, at the current level, make it down to 47.30, fail at 47.30, move to 47.15, fail at 47.15, move back down to 46.93, recover above the weekly VWAP, hopefully, start pressing up against those highs. Now for Bitcoin, we are getting very close to that sweep area. Remember, we talked about, ideal trades. And so if we do break this area right here, we will slide down here. Now, the ideal situation is we simply sweep this area. We just maybe do a quick right back up. Then you long the when it breaks back above, and you set your stop at whatever the low is. So that's the ideal trade. And maybe a more perfect world and kind of, front run that idea is maybe we just lift off from here, but definitely looks a little bit sketchy. So not really worth the risk, but technically it did tag that low. And the yearly low is down here at 40.7. So this is just the last week's low. And then we got the yearly low down here at 40.7. So if we just sweep last week's low, good long opportunity, but, definitely run into the area of possibly getting stopped, again, at that confluence of resistance and where the 1 hour estimated 200 moving average will be. So that's kind of, a little bit sketchy right there for that idea. And then, the perfect kind of sweep would be sweep this level, do a quick sweep, set that stop right there, and then trade that up. You've got a lot more room to play with. And hopefully that kind of springboards us a little bit higher. Both of those trades are, more or less the same in terms of trade type. But I'd say, the yearly low sweep would be a little bit better, but last week's low, still a good trade opportunity. Just got to watch out because you're still leaving that yearly low untapped. And so we could kind of do something like this, where then this is the big sweep, right? And then we end up moving up higher from right there. So, or we just, maybe you get along here and then we chop down here into the end of January and sketch everybody out, get really close to those stops, and then end up moving higher. And then that would kind of be a triple tap, because we would, sweep here and then finally bounce off on that third tap. And I'll just Google power of 3. I want power of 3 trading. I'm only pulling this up because it's going to give you a really good diagram. So the power of 3, this is exactly it. Bounce once, drop lower, sweep, right? You set your long here with the stop at the low, bounces on that, where your kind of entry level is, and then it moves higher. So just kind of using that as an example, get rid of some of these lines. I'll get rid of that. We'll get rid of that. Get rid of that. So as you can see, if we did sweep that yearly low, caught right back up, then we bounce right back at that 40.7, 40.5 level, then that move higher. Then we move higher. That would be a power of 3 type of trade. So certainly something that you can employ, if the opportunity presents itself. So nothing to glean from Bitcoin. And obviously, if we do recover here, doesn't look likely with, current candle, but definitely want to see it get back above A, this 1 hour estimated 200 moving average, and then B, this high right here, which is our current weekly high, which is 43.5. So above 43.5, things look good. So you could just be patient until above 43.5, or you could try and see if a power of 3 forms down there. So ETH, obviously looking a little weak. Yearly low is, I want to say, yearly low is all the way down here. Right here. So Tuesday, January 2nd. So yearly low for ETH is about 2,100 flat. Last week's low would be down here at, and I'll just kind of creep this up, down here at 2165. So, you got a long ways to go for those sweeps, and I really don't want to see ETH really sweep the yearly low. That's a big drop, right? I mean, I guess you could still be bullish in that scenario, but it's definitely very scary. So what I'd like to see is these sets of highs right here, the kind of the week of January 2nd, so the first week of January. I want to see this high right here hold, which is 24.32. So we're getting obviously close to that. If we can sweep that and then make it back up above last week's low, then I think that's a good kind of long opportunity with your entry right there and then your stop right there. If you want to play it safer, then maybe we just sweep this week's low, or you wait till it breaks back above this week's low, because this is just the low from that drop on last Friday. This is last week's low, and then this is the current week low. So I don't know why I was saying last week's low, but the Friday 12th low, because it coincides so closely with the high from the first week of January. So basically this little area between 24.56 and 24.32 is going to be very critical. We're obviously just kind of entering that area now. So I want to see it kind of hold this area, then break back above the current week low. And then I think that probably looks like a good long, or you could just play it safer by waiting for it to break back above the 1 hour estimated 200 moving average, because pretty much every time it's done that, it's skyrocketed, and every time it bounces off of it, it moves higher. So two plays: sweep, this high from January 2nd, 24.26, long it on a break back above the January 12th low, or the current week low, which is 24.71. And then if you just wanted to really play it safe and just be patient, just wait for a break back above the 1 hour estimated 200 moving average. And then, that usually we see springboard type of price action off there. So, unfortunately, we are just dealing with a bit of a dip. This is why I always recommend, around the Bitcoin ETF to have some dry powder. That way you can, take advantage of these types of things, but definitely better to be patient than just start grabbing the first kind of sell off. I think it's probably better to, see how we react around the key levels. And so obviously key levels for BTC being, between 40.7 and 41.5. And then for ETH, the key levels being 24.32 up to 24.57. We want to see the areas hold. Obviously, we're seeing some sort of interest right now, seeing a little bit of wicking every time it drops down, but plenty of time to go. still a lot to happen. So best to be patient. So how would you play the BTC mining stocks? Well, I'm actually not playing them, but I'll just pull up like Mara as an example, and we'll go ahead and check that out. So obviously parabolic moves due to BTC, due to the BTC ETF trade. We've deviated below the high from July, which definitely a little worrisome there. But I mean, just think about it. So if your thesis is the Bitcoin ETF is good for Bitcoin long term, then owning, mining stocks after a large sell-off is not the worst thing in the world. But also you have to think about it in context. They're down 50. Mara's down 50%. So the way I'm thinking about things is like I would prefer to own ETH and high beta ETH because I think that we're going to get eventually the same trade as we got for Bitcoin for the ETH ETF. And obviously high beta ETH has just been performing very well, at least in the near term and for most of this year as well. OP, Matic, SEI, SUI, TIA, Aave, SNX, blah, 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 blah. And so I think those are a better trade, but we also have to recognize that the halving is coming up this year, and the halving is going to increase difficulty and make miners hopefully a little bit more money, but also, rejig some things. So probably post halving, I would expect the miners to probably really outperform because we typically see Bitcoin outperform too after the halving. So I think the halving should be a big catalyst for the Bitcoin miners. Doesn't mean that you can't own it now. I mean, it's down 50%, and so it's not the worst hold in the world, but it's still up how many percentage points from the low? It's still up 400% from the lows earlier this year. I probably would, I would definitely be patient. I don't think you need to jump on these right now. But I would definitely look how it reacts around the daily estimated 200 moving average, which is coming up. May tag that in a couple of days or weeks. And then obviously if that fails, then I would really want to see how we react at probably the August lows, and then would like to see how we react to these October lows if we end up making it down there. So how I would play it is patient. I would say that probably the expectation is halving should be a boost for the mining stocks. Halving's quite a ways off. You can probably start to get interested 60 to 90 days out of halving. And for other than that, just be patient unless you are very bullish and you have a very bullish thesis on the miners. I don't think you need to jump on it immediately. And this let's check this megaphone channel out, see if this is actually valid. Yeah, gotta love the megaphone channels. Let's get these wicks correct. Yeah, so as you can see, this is a giant megaphone channel. Would not shock me just based on how these roll is if we do something like that. And then from here, this is when people start getting excited about the halving and really start buying en masse. So I think you're good. I think you're good to be patient right here. But, I would probably draw that megaphone channel, and then I'd draw these support lines and resistance lines that I lined out. And then obviously keep your moving average on there, estimated 200 estimated moving average, and just see what type of reactions you get. I don't think these are going to move too crazy in the near term. And I guess crazy could be down, but I don't think it'll be too horrible. Or I don't think it'll be good in the near term, but I don't think it'll be horrible to buy at this level just based on what we've seen for 2023 performance. So, and sorry for anyone who was like, what are you talking about? This was the question we got. So if anyone's like, why did you spend so much time on that? But we do appreciate all the questions in the chat. You're welcome anytime to ask them and reach out. We do love the GMs and the hellos. So appreciate everybody listening. We're going to go ahead and wrap up here. My best advice is to just mark out those key levels that I talked about. Check for sweeps. I'm very confident you can be patient for the month of January, but we definitely want to see those key levels hold before getting too crazy with entries. But again, if you are kind of slow dripping money into the market, not the worst time in the world to do it, but it is always important to be cognizant of kind of the macro context. And if equities start getting really ugly, then you may want to have more dry powder for lower prices. So always something to keep an eye on. And I'm of the mindset that if equities are moving higher, crypto should as well. So, I'm going to keep that outlook and, just cross fingers and check out what happens at these key levels. So that being said, good luck, happy trading. See everybody tomorrow.